This section talks about the potential responsibilities of doing a short sale. So it's important to explain the process here. First, what will happen is whatever the bank loses, and if they forgive you from paying back any of the difference, then the bank will issue what's called a 1099-C, which is a cancellation of debt. So for example, let's say you owe $500,000, but we sell your property for $400,000. That is a loss to the bank of $100,000, and they are required by law to issue a 1099-C, which is again a cancellation of debt. Now, this can be a taxable event by the IRS or the state of California, but there are some exemptions to this, and not everyone needs to pay taxes, but you need to determine that for yourself. The first of these exemptions is on the federal level is the Mortgage Debt Relief Act of 2007. That basically says if this is your primary residence and you have not pulled any money out above and beyond the original loan amount, then you'd be excluded from paying any taxes. Now, what is important about this tax relief currently is that it expires at the end of 2012, meaning you have to short sale your property before December 31st of 2012. If you'd like more information about this, please go to irs.gov and search for the Mortgage Debt Relief Act of 2007 or speak with a tax advisor. There is also a similar provision for the state of California, created by California Senate Bill 401. There are slight differences for the state, so if you need some more information, go to ftb.ca.gov and search Senate Bill 401, or again, talk to your tax advisor. If this is not your primary residence, or you have pulled money out above and beyond the original loan amount, there is another provision. That's what's called filing for insolvency. Now, this is available both on the California and the IRS level. The definition of that is that if you have more debts than assets, then you could be deemed insolvent and not have to pay any taxes. This is much easier to qualify for. You basically just fill out a one-page form to the IRS, which is a Form 982, the year that after that you short sell the property. This has nothing to do with your credit. It has nothing to do with your bank either. This is simply between you and the IRS or the state of California. But you need to talk with your tax advisor to determine if any of these apply for you. Some other exemptions are if you filed for bankruptcy, or with investment properties, you can use capital losses to offset the debt forgiven. Now, I must disclose, I am not a tax advisor, and I am not qualified to tell you whether you qualify for one of these provisions. And I simply share this information with you so you can have an educated conversation with your own tax advisor. And if you don't have one, we can provide one for you. If you have your own, that's great. Just make sure that they are well versed on the Mortgage Debt Relief Act of 2007 and insolvency. And if you don't know anyone, once again, we can get you a free consultation from a tax advisor to assess your situation to determine if you will have any tax exposure before you decide to do a short sale, and it's completely free to you. It's best to determine all of this before you start a short sale. Now, some people may even determine that they have tax ramifications, but they still choose to move forward with a short sale because it makes economic sense for them. Part of my services, after you have a free consultation with me, is that I provide you with a reference to get a free tax assessment before you decide to do a short sale. So this has been my presentation on short sales and tax information. Give me a call to set up your free, no obligation, and confidential consultation over the phone or in person, and we can go over any specific questions that you have. Thank you very much, and I look forward to speaking with you.